Hello and good afternoon. You're watching Market Fatafat on ET now with me Snehisha, and with me as always is Ankita Saxena. Now this is a show where we'll be taking you through all the big buzzers in today's trading session, either on the back of fundamentals or on the back of technicals, and we'll have a technical expert joining us on the show soon as well. But before we do that, Ankita, let's take a look at what the markets are doing, because we did see a stellar recovery coming in. Nonetheless, right now we're 120 points off the day's high and we've slipped over nominally to the red as well.
Absolutely, Snehi, as you rightly pointed out. In fact, we kissed 23,000 levels twice today and then we gave up those gains. We have slipped into the red on the Nifty, albeit very, very marginally. I mean, Nifty has done absolutely flat. So a lot of sideways move coming in, since Monday. But look at Nifty Bank. Nifty Bank's recovery remains intact. In fact, it is trading with gains of almost 396 points right now, and that has remained intact as far as Nifty Bank is concerned. Let's look at the broader markets. Then broader markets also, the recovery remains intact. Mid cap is trading it with gains of 1.1%. Small caps up 2% in trade after the massive sell-off that we saw coming in the broader markets. A bit of a relief coming in today for the broader markets, and there also the recovery is largely intact. Not like Nifty where we have given up those gains and we have turned flat. But sectorally, we have Nifty Realty, PSU Pack, Metals, Media, Nifty Energy, and also financial services that's trading in the green, barring IT Pharma that were not doing well in the morning. Now we have auto and FMCG that has slipped into the red marginally though, but nonetheless they have. Now Nifty Pharma, we had that big news coming in of the looming tariff threats by Trump. That is the reason why Nifty Pharma is getting weighed down by that sentiment. We have a couple of US FDA inspection on a couple of counters. So Nifty Pharma has been reeling under selling pressure on the back of that. Nifty IT is a top losing sector with cuts of 1.3%. So that's how largely the market is shaping up right now, Snehi.
Okay, that's the construct of the market as we speak. But on that note, let's kickstart Market Fatafat for the day. And joining us on the technicals is Foram M.Chheda, the founder at ChartAnalytics, and she's here to guide us on which stocks are looking good on the technicals. And from our in-house research team, we have Janai joining us on the show. Good afternoon to both of you. Foram, always a pleasure speaking to you. Thanks so much for joining us once again on the show. And let's come to you for your first stock. Reliance, the Nifty heavyweight, is the stock that you've picked out for us. Now, last 1 year, last 6 months, it's given very subdued returns for its investors. And today also the stock is quite flat. Now, amid a market like this, a large cap like Reliance, where do you see the stock headed going ahead?
Well, hi, good afternoon, and thank you for having me on the show. It's always a pleasure to be part of the show. Well, to begin with, on Reliance, we did see, as you made a mention, that we very subdued returns, or I would say that there were negative returns like since July to almost October, November. It was almost I would say a negative return of closer to around 25%. Now, since then, I would say since the month of November, we have seen some stability where a base formation is taking place in Reliance at around 1200 levels to around 1190. So at the moment, I would say it's been in a consolidation range. So from a downtrend, now it has started moving in a consolidation to sideward trend since the past 3 months. And the range remains between 1200 to around 1320 on the upside. So currently, those who have can look at holding on to it unless we do not see a weekly closing below the levels of 1190. And if somebody is even looking at investing and wants to start investing, can consider these levels because the risk-reward ratio turns out to be quite favorable. And one should look for the intermediate resistance level closer to around 1300 to 1320. So from that perspective, it can be considered as a hold, or a marginal position can be considered.
Right, all right, that's the view coming in RIL on the charts. But Maruti Suzuki is a counter that's in focus today on the back of an HSBC note that's come out. And HSBC is maintaining a buy call with a target price of 14,000 on Maruti. They feel that the e-Vitara specs versus the price proposition seem favorable when compared to the European and even the Chinese models. Also, the import duty on the Chinese CBU and other auto parts will provide some support to relative pricing of the Suzuki EVs, and also the MSIL EV launch targets affordable segment in the European markets. That's also a big plus coming in for Maruti Suzuki. It has given up those morning gains currently. It is trading at the lowest point of the day right now with cuts of 0.9%.
Okay, so that's the reason why Maruti Suzuki is in focus today. Foram, coming to you. Tata Steel is the stock that you've picked out for us on the charts. Tell us what this stock is looking like on the charts going ahead. Last 6 months, it's seen a negative return coming in. Last 1 year also, the stock was rather flat. It's not done much. Can we expect this stock to pick up some steam going ahead?
Well, if you have observed that one is the Tata Steel did see almost a decline by around 28 odd percent from its high, I would say intermediate highs of 170 to closer to 120 levels. Now, so this lows were formed in as on in the middle of Jan and at 122, and from there we are seeing a bit of a very good rebound. This rebound has also been nearly a 10% up move from the low levels of 122. So I think it has been one of the outperformers, I would say, comparatively. So overall, the stock is seeing some kind of base formation or accumulation as far as volumes also are concerned. It seems to be a safe level. So one can consider holding on to the stock or look at buying 20 to 25% of the total number of shares that one can look at buying into this particular stock. Buy a very small quantity at these levels as the risk reward ratio is favorable. Can maintain a stop loss below the levels of 129. And since there is a good rebound that is happening in the stock, this rebound can move towards 140 levels.
Okay, so that's the take coming in on Tata Steel and the outlook on the charts. Let's move on, talk about a big buzzer in today's trading session, and that stock is IREDA or IREDA. That stock is up by 4.5% as we speak. Now, the Indian Renewable Energy Development Agency, which is IREDA, announced yesterday that its wholly owned subsidiary has obtained provisional registration to operate as a finance company at Gujarat's GIFT City. Now, according to an exchange filing by the company, IREDA Global Green Energy Finance IFSC Limited has been granted a certificate of registration by the International Financial Service Centres Authority, which is the IFSCA. Now, this registration allows the company to engage in financial activities within the International Finance Services Centre at GIFT City, and this regulatory approval, initially conveyed through a letter on 4th of September last year, marks a key milestone for IREDA's international expansion strategy as well. So, positive news flow coming in for IREDA, wherein its subsidiary has received the go-ahead to operate as a financial company in GIFT City. On the back of that news flow, IREDA is up 4.75, rather close to that 5% gain coming in on the stock just on an intraday basis today.
Absolutely, that's IREDA trading with gains of almost 5%. But what's trading with gains of also 2.5% is Concord, Janay, on the back of a big order win coming in. Take us through the details of the order win.
Well, as a Container Corporation is in focus, the company has actually awarded an order for manufacturing and supply of 30 BLSS spine car, which is rakes on turnkey basis, to Braithwaite and Company, which is a Government of India undertaking under the Ministry of Railways. Now, if you look at the overall order size, the order is valued about 690 crores, and the supplies are said to be completed by the timeline of August 2026, and that is why Container Corp is in focus. If you look at the current price, currently it's trading with the gains of about 2.3%.
Okay, so that's the reason why Concord is in focus today. The company has awarded an order. But on that note, let's move on to the technical check once again. And Foram, you've picked out JSW Energy for us on the charts. Give us a sense of what the charts are looking like today. The stock is higher by 3.5%. However, in the last 6 months, it's seen a massive cut coming in. Last 1 year also, a low single digit cut is what the stock has given in terms of returns. What's the outlook going ahead on the charts? Are better days ahead for JSW Energy?
Well, it seems a little uncertain as far as the better days are ahead or not. So, as when the stock formed a high closer to around 800 odd levels in the month of September last year, we have seen a clear decline in the stock by nearly 48 to around 50%. Now, it has been forming a base, and technically speaking, that there has been a positive divergence on RSI, which is indicating that this rebound can continue. However, I am a little cautious as far as the stock is concerned. So, since those who are holding on to the stock cannot look at just selling, because it's just today we can see an uptick in it, but I would suggest them to wait for a closing above 500 levels on a weekly closing basis, because that can be a turnaround for the stock. But at 500 levels can be closely watched. Any selling pressure can be considered to probably look at switching from this stock.
Alright, that's JSW Energy on the charts. But with that, it's time for a quick breather. Don't go anywhere after the break. We'll get you some more buzzers on the other side. Stay tuned. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today, either on the back of news flow or in the back of technicals. But let's get started yet again. Then Tata Motors is a stock that is in focus today on the back of a big upgrade coming in by CLSA that has upgraded the stock to high conviction, outperformed from an earlier rating with a target price of 930 rupees per share. They feel that the adverse near-term outlook giving scope to enter at favorable valuations. They believe that JLR is presently trading at 1.2x FY27 EV to EBITDA, which is way below its normal multiple of 2.5 times. Now, at the current price implied per share, the value of JLR is rupees 320 versus the target valuation of 450 per share in SOTP. Now, thus giving enough cushion against the impact of US tariff hikes and weaker than expected demand slash margins. Now, post a couple of subdued years that they've seen for the M and HCVs, they believe that the cyclical revival is going to start from FY27, which could get get the price that'll get priced in the coming quarters. And in the back of that, it's a big positive coming in for Tata Motors. In fact, the stock hasn't done really much in the last few months, but on the back of this positive note, Tata Motors is in focus today. It has given up all those morning gains, currently trading in the red, absolutely flat.
Absolutely flat is where Tata Motors is, but that's not the story of the stock in the last couple of months. Like Ankita mentioned, Forum, you've picked out Tata Motors for us on the charts. Last 6 months itself, the stock has seen cuts of more than 30%. It's been a couple of rocky months coming in for Tata Motors. Do you see the road ahead smoothen out a little bit for this stock?
Well, as you rightly mentioned, it's already seen a decline of more than 30%. It's like rather more than 40% also if we consider the highs of 1179. Now, the stock price is forming a base near the levels of around 680 to around 670 levels. Now, the most interesting part, technically speaking, is that when the stock price is forming like a lower bottom since November onwards, if I have to consider the levels from around 759, the stock price has consistently seen a decline, forming lower tops and lower bottoms. However, the RSI is indicating more like a higher top and higher bottom formation, like a positive divergence, which means that the selling pressure is reducing at the moment, and possibly it is now that strength weakening is now turning and it's gaining some kind of a strength. So according to me, those who have shouldn't consider to exit this particular stock. But for a fresh entry, I would suggest to wait and look for a levels only above 725 on a weekly closing basis, because right now there is a short-term resistance at those levels. However, at this moment, those who are holding can maintain a very strict stop loss below the levels of around 664. And if you notice that from the past couple of trading sessions, around 667 to 670 is acting as a very good support levels, or is being continuously forming those lows, and we can see a rebound. And hence, I am looking at a hold at this point of time.
Okay, whole call coming in on Tata Motors from Forum. Let's move on. Talk about a stock that's in focus today. L&T is the one that we're talking about, because this infra major announced last evening that it has acquired the remaining 26% stake in L&T Special Steels and Heavy Forgings Private Limited. This from Nuclear Power Corporation of India Limited for an amount of 170 crores, which now makes this company a wholly owned subsidiary of L&T. The acquisition includes 1.47 billion equity shares, 1.67 billion preference shares, and a secured loan provided by NPCIL to L&T Steel. And this move allows L&T to undertake incremental investments, expand beyond the energy sector, and improve utilization of L&T Steel's manufacturing capabilities. Positive news flow coming in for L&T. That stock is higher by 2.2% as we speak.
Absolutely, stock up by 2%, but L&T in the last 6 months, Forum, that's also the name that you have picked out. In the last 6 months, it has been correcting over 7 or to 8 odd percent. Tell us, from here on, do you start seeing an up move in an L&T going forward?
Well, I wouldn't say exactly that it's changing trend to bullish. It's yet very uncertain to say. Now, what happens, generally speaking, we have seen a very big declines coming in most of the stocks. Particularly, if we talk about L&T, it has declined by nearly 19% from those highs of around 3,960, and now it's forming its base closer at a level of closer to around 3,100 odd. So right now, this rebound, what we're seeing by 2%, just indicates that one can look at holding on to the stock and not exit at almost the lowest point. One can look at holding on and look for a higher levels of around 3,400 overall from the near-term 2 to 3 month time horizon. 2 to 3 month time horizon. As far as technically, it yet is indicating bit weakness. The reason being is that there, as far as the moving averages are concerned, the 50-day has crossed below, or rather breached below the 100-day and the 200, which is indicating overall trend is turning weak. So one should look out for this rebound at 3,400 levels, and volume should be closely watch out. Any selling pressure would indicate to switch from the stock. Otherwise, one can look at holding for 3,400 and then subsequently 3,500 levels.
Okay, well, that's the outlook coming in on L&T on the charts. But Janai, coming to you, TTK Prestige is the stock that you've picked out for us. Positive views, so tell us what it is.
Well, as TTK Prestige is in focus, the company is going to commit financial resources of about 500 crores over next 3 financial years, commencing from Q4 of FY25. Now, this outlay will cover both operational expenses as well as the capex capital nature expenses. Now, if you look at the overall breakup, the spends towards operational area is estimated about 200 crores, while the rest 300 crores will be allocated towards the capex for the company. Now, this plan may also result into some transient impact on operating EBITDA margins over next 8 quarters is what company is reporting. Overall, if you look at the stock price, currently it's trading with the gains of about 1.4%.
Alright, that's TTK Prestige in the back of that news flow. But Foram Manappuram Finance is what you picked out for us. Now, this one is again a counter that has been, in a corrective phase for the last 6 months. It's only the last 1 month that it started moving some 2.5% gains that it has given. So, what do you see on the charts for Manappuram now?
Well, if you look at from a broader perspective, the stock price did see a 40% decline from 230 levels from August to almost November. From November onwards, it formed a low of closer to 138. And since then, we have seen a very gradual up move. Although it's not been into the limelight too much, we have seen a very consistent up move coming in. Now, technically speaking, it has been moving in a very disciplined manner in a rising channel. And in fact, from 138, the stock price moved closer to almost 210 levels, just probably at the beginning of this month. To be precise, on the 7th of Feb, it formed a high of 210. Since then, we saw a steep decline coming in, but it has taken support at the lower side of the rising channel, which becomes that it is yet in that it is changing its trend. Secondly, the stock price is also crossing the 200-day moving average, indicating the underlying trend is also turning out to be bullish. So overall, those who have the stock and look at holding on to the stock, for fresh buys, I would suggest it is advisable to wait and look for a weekly confirmation. And it has a potential to up move towards 207 to around 210 towards its previous highs, where one can look at reducing its position.
Okay, so that's the Forum stake coming in on Manappuram Finance. Let's move on. Talk about a stock that's doing decently well in today's trade. A 1% uptick coming in on Mahindra Lifespace Developers, because this real estate company has announced yesterday that it has partnered with Livingston Infra Private Limited for a cluster redevelopment project in Mahalakshmi, which is in Mumbai. Now, this project has a gross development value, the GDV, of 1,650 crores. So it's a big project win coming in for Mahindra Lifespace. And Amit Kumar Sinha, who's the managing director and CEO of the company, said that this development marks the company's strategic expansion into South Bombay's premium real estate market by creating residences that continue to contribute to Mumbai's urban renewal. So positive news flow coming in from Mahindra Lifespace's GDV is significant at 1,650 crores for this project. On the back of that news flow, the stock is up 1% as we speak.
Alright, Mahindra Lifespace is up 1%. Forum Interglobe Aviation, Indigo is what you picked out for us. Last 1 year it has given some really good returns for almost 43%. In fact, in the last month, I mean, there was a bit of a slowdown, and then again in the last 1 month it has picked up. It's given 6.5% returns. From here on, where do you see the stock headed?
As you rightly mentioned, that we have seen even in the last 1 month that has been giving some positive returns. That indicates that there has been an outperformance in this particular stock as compared to its leading index. Now, at this point also, those who are holding on to it should look at holding, because from a broader perspective or from an intermediate phase perspective, the stock remains into a consolidation within I would say more like a technical pattern of a symmetrical triangle. So currently it is in midway and one should look at holding on to it. Those who have been holding for a shorter time frame should look at levels of closer to around 4,500 to reduce their positions. Otherwise, from a longer term perspective, it yet continues to remain a hold.
Alright, that's Indigo on the charts. But coming to the pharma pack, the entire pharma pack that is in focus today on the back of that reciprocal tariff threat. But besides that, there was a note also that Macquarie came out with on Indian pharma. In fact, they feel that India's contract research, the CRDMO business, is benefiting from the secular growth as well as the regulatory tailwinds of the segment. The Indian CRDMO emerging as the growth leaders for the small molecules. The industry is set to grow at 14% CAGR to $14 billion by FY28 is what Macquarie feels. The US Biosecure Act is also likely to accelerate growth to late teens for the Indian CDMO business. Also, Divi's Labs and Suvin Pharma stand out as product that led by a CDMO working on the new technologies. Also, they expect 1,000 basis points improvement in the EBITDA margins and 1.5 to 2x improvement in the ROIC by 2030. Now, within the regional CDMO coverage of 11 companies, they prefer Indian and Korean CDMOs with Divi's Labs and Samsung Bio has the top picks. They're maintaining an outperform on, they've initiated an outperform on Divi's Lab with a target price of 4,700. Syngene, they've initiated an outperform with a target price of 835, and for Suvin Pharma, they've initiated an outperform with a target price of 1,500. So the pharma pack is in focus on the back of that note from Macquarie as well.
Okay, so pharma pack is in focus today. It's a sector in focus on the back of multiple news flows coming in, like Ankita mentioned, the Trump angle and also now this note. But Jinay, coming to you, Macrotech Developers is the second real estate name that we're talking about on this show, and the stock is also holding up pretty well. Tell us what's the news flow here.
Well, yes, we have Macrotech Developers. We have a note by Jefferies maintaining buy rating with the target price of 1,600. Now they see a high visibility of 20% pre-sales growth and 20% ROE trajectory going forward as well. Also, the Palava land valuations, they believe that provide upside for the company as it is scaling the premium inventory of Palava township. Also, the higher pricing trends and the lower finance cost, both the combination of both will drive up the margins for the stock is what they believe. And currently, if you look at the stock price, it's trading about 1.4%.
Alright, that was the last stock for the show. We're completely timed out in this edition of Market Fatafat. Thank you, Jinay. Thank you, Foram, for joining us today. Snehi and I will take your leave with that. Thank you so much for tuning in. Don't go anywhere. Stay tuned for more market action on ET Now.